The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And good afternoon. It's a beautiful November 13th, 2012, at the headquarters of Technical Trading and Investing. That's TFNN.com. And kind of seeing what's going on in the markets today. Not a whole lot so far. Tried to push it down. Couldn't get anything going down. Tried to push it up. It's up about 5 points in the S&P. But not a lot of volume, about 2 billion shares. Means that we're probably going to end up with about 3.1 billion shares by the end of the day. So not much of the way of an energy. I suspect we have one more leg down in the market. And that's going to take us to 1350. Whether that happens this week or it happens in next week, I'm not. I think we've got 1350 to test out here in the S&P before Thanksgiving. There's very little to suggest that retail sales are going to be up, and everything to suggest that tax selling will continue at least into probably, I would imagine, in the first week of December, maybe setting up a small rally, the first couple of days of December as the selling pressure diminishes and gets out of the way. These bounces have been weak, if not tepid. I've been watching a lot of stocks. I've got 5 positions in the Path of Least Resistance newsletter. All of them are doing well. One is long play in energy. The other 4 are short plays, mostly in technology and S&P, and they've done all well. You can make an argument that short term we had a bottom this morning, but I suspect there's bigger issues afoot, and we're going to get into why this market, I would rather be short it right now than long it during the show today. But what do we have going on out here? Well, the CFO turned CEO decides to kill off any competition. Steve Ballmer came out and fired the, how can I say this? Fired the guy that was responsible for Windows 7 and Windows 8 and Windows RT, and basically had to crack the whip, made a lot of enemies, but at the same time, his counterpart, or very close to his counterpart in Apple, same thing happened. These CEOs are knowing that their jobs are on the line. They don't want to make it easy to have somebody else available to slip right in and take their place. Steve Ballmer, in fact, the market would have much preferred Steve Ballmer got fired. He's the CEO of Microsoft. In fact, they probably would have had him beat with a shovel. He's not very well liked out there, and I can tell you that there is one thing. Both Microsoft and Apple have the same thing. They have a chief financial officer that became a chief executive officer. In a tech company, this is normally brutal and sets a long time of no growth in a company where they manage a company from its growth spurt into does it pay a decent yield kind of companies. I think that's a lot of what's happening in Apple right now. But we have 2 really good executives that have been fired for all practical purposes. Apple was a little smarter about the way they did it. They made sure he couldn't go and do any damages for about 3 months by paying him a ton of cash. It looks to me like the CEO at Microsoft pretty much already had an idea where he was going, decided not to sign up for the parachute on the way out. Imagine he's going to show up somewhere, maybe a startup, but a good manager, certainly much better than Ballmer. Ballmer has been an embarrassment since he started. In fact, they had to pull out the big guns to make it look like Ballmer would not be embarrassed again. Basically, everybody out on the talking head shows today pretty much all voice the same thing. We wish he was gone. We thought that the guy he fired was better than him, and this means that maybe Ballmer's going to be around longer than the 2017, that they hope that they would finally get him out of there after 17 years. My guess is that he's gone next year. If the market pulls back, stuff doesn't happen, I don't think even Bill Gates can save him. He had to actually go to Bill Gates today and drum up an article that said Bill Gates was way behind him on this firing of the other Steve. And it's just getting kind of murky out there when you're canning your best guys. Basically, this was he put two women that were, I guess, fairly decent CEOs, but nobody in the scope or in the ability to carry themselves as this dude. And the question is whether or not they can carry it up. Steve Ballmer basically now, after he got flogged early this morning, releasing a whole bunch of negative articles in press and throwing rocks at this guy on the way out the door. Pretty low class, if you want my opinion. But the best thing that could happen to Microsoft would be that maybe he has an illness that means that he has to retire early. Guess there's just so much there. Kind of sad to see Microsoft squander it. But not a bad day to give up $10 billion worth of market cap by firing your best guy out there because, of course, according to you, after he left, he just can't work well with others. Well, none of these guys work well with others. If you want a bunch of yes man, you get exactly what Ballmer gets, which is this dope spent $450 million on advertising for the last Windows Phone. He sold 20 million of them and advertised 450 million with them. He should have been fired for that. Anyway, neither a CEO from Microsoft or Apple, in my opinion, are very good. I think the idea, which is probably put forth by Bill Gates, was to come up with this particular strategy. But you've seen Ballmer miss 3 or 4 cycles of development out there from the and basically screw it up. But from the iPods to the iPhones to the tablets, they've been able to do only one thing right, and that's the Xbox. And that was because Steve Ballmer had nothing to do with it. Even when Steve Ballmer had his greedy little hands in Vista, he got a lot of that all over him. This guy came by and cleaned up Vista, got Windows 7 out, got Windows RT out, Windows 8 out, and it's pretty much what everybody thought it would be. I don't see a lot of reasons to say this guy didn't do his job. Just because, investors don't care whether they all sit around in a drum circle, and hug each other and sing Kumbaya. They wonder if they get the job done. And I think Ballmer may be a lot of Kumbaya going on here. But my other belief is that this guy was probably in line next spring or next summer if things don't go well at Microsoft. Ballmer knew he'd be kicked out, and this guy would probably be the likely candidate to take over for him. Might as well get him kicked out at this time. I think the same thing pretty much happening in Apple. You don't want anybody that's better than you, and CFOs make lousy CEOs. I'm trying to find one example so far in technology where that's true. If you've got a big company that is, up 2, 3, 4, 5% in business one year and down 5% the next year, do CFOs do well? Yeah. If you get one that's up 50% and down 75% and up 200% the next year, basically these guys live for control, and they do very well. They do very poorly when in chaos. They only do well in trending markets, and we're going to see more of that. They did one more thing that this guy was responsible for was Internet Explorer 10. Microsoft has just released the Internet Explorer 10 preview for Windows 7. As much as I dislike Ballmer, it's hard to see that they don't have a very good hand. I think much better than Apple. Maybe not as good as Google, but still very good hand out here. Tesla won the Car of the Year by Motor Trend magazine last night in New York City. We were talking about that yesterday. Probably why the company wasn't hurt as well as I thought it would by the negative news of them getting sued by states out there for both selling and being the dealer for these Tesla cars. There's nothing wrong with the car. I said it yesterday. It's a fine car. I think, maybe just because of the gas crisis in New York, and a lot of these riders are all up there in the Northeast, may have had something to do with it. Is it probably the best car out there? No. By far, BMW 325 is 330. That series car continues to be the best car ever made. It does everything right. And I think they're just tired of giving BMW the nod for being the best car built year after year after year. But I imagine if you told somebody to drive a Tesla across the country and you found out that they had to go 220 miles at a time, they'd probably, before spending half a day recharging the thing, I think you'd probably get a different tune out of them. The other thing is what's going to happen when you buy a car that costs anywhere from $75,000 to $100,000. In, let's say, 3 years, you got to buy a new $25,000 battery pack. We need to get the prices of those down. We need to get the range up to probably 350, 375 miles, and the cars down into the I would imagine $30,000 range before there'll be a good alternative. Right now, Tesla probably in the sweet spot, but I suspect in the next 6 months, after a lot of this has gone on, they will have the same fate that just about every other, well, in fact, every other car company since 1902 that tried to build an electric car. Until the battery technology comes by, everything else is there. You just need battery technology that doesn't exist yet today, or at least no one has any that can ship. Maybe he's got something in the background. I know GM's working on something, but it's got to be cost and the ability to not have to spend 15 G's replacing the battery in 4 years. We will be back in just a few minutes. I want to get into a few things that we're going to be talking about, rather deeper subjects today. And that's part variable change, because it's got to be part of some of the charts we show today. If you want to call in, you can always call me at 877-927-6648. That's 877-927-6648. We'd be glad to talk to you. And maybe some of the things we're showing today you might want to call in and ask about.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back, I wanted to talk about a concept. It's called variable change because we're going to get into it on some of the other things I'm going to talk about today. Market continues to do, kind of just bounce a little up, bounce a little down. I just don't see a lot of movement out here. I bet we're probably going to get something like a close just like yesterday, looking at maybe a 1380, 1382 close like that. Maybe there'll be a little more selling into the close. But 2.2 billion shares so far today, just not a lot of movement in this marketplace. And I suspect that either we continue to do this, good chance that tomorrow we have some decent action in this marketplace. I still think we're going down to 1350, and I'm going to show you why after the break. I wanted to get to variable change, and that is a concept in mathematics. I've talked about this before, but I know that it's been 6 months or so. There's a problem in math called the Monty Hall problem. If anybody remembers the game show from the 70s, the game show host basically had three curtains or three doors, and behind it there were two goats and normally a prize like a new car or something. And after you were made your guess, he would open up one of the other doors and then show you what was behind there, and always it was a goat. So you got a little bit more information. Then he'd ask you whether or not you wanted to change your guess. Now, through a bizarre set of mathematics called variable change, your odds just went from 33% to 66% if you change your guess. And in the game show, they would give you that. Finally, somebody stood out in front of the game show one day, and that was pretty much it, because everybody figured out whatever you do, just change your guess, and 66% of the time you're going to win the car. It sounds bizarre. PhDs have argued against this, but it absolutely works. There's online games where you can play. And why is that? And that is because you are gaining information as the game goes along. That's just like the stock market. You may have made your play based on information at the time. In this case, it's random, but normally you look at a chart. Maybe something happens. Maybe news comes out. Maybe there's a change in the regulatory industry that your stock is in the sector of, or maybe news comes out of all kinds of stuff. As you gain additional information, you should probably change, at least update your positions, your stops, as things move along. Your odds also increase very well. But one of the things that we want to get into was something I was trying to show yesterday. It is, some people call it Max Pain. I wrote an article in 2004 for Stocks and Commodities magazine. And in that article, I basically said there was probably a better way than that way of Max Pain for calculating where a stock would expire. Now, one of the most important things that we need to know, let me see if I can bring this up, is what is the spread between the expiration on Friday and the the next expiration cycle. So hopefully you're watching on Tiger TV right now this chart. I'm hoping you are. But since I see my engineer in there with his head buried down, you may not be seeing this chart on Tiger TV. So I'm going to throw something at the window here in just a second. Maybe he's come back. Maybe he's showing it. It's hard to tell. Hey, are you showing this chart on Tiger TV? Okay, there's the thumb. Unfortunately, I don't have a wonderful monitor here, so I can't see whether or not they've done it. And, of course, they're buried with their heads behind screens, talking to people, doing things. Anyway, this is the expiration curve for the SPY for this Friday. Now, each day, people will buy and sell options. This chart will change slightly. What it is where the most amount of money will be lost from both the puts and the calls. If the most amount of people were going to lose the most amount of money, where is that point in time on options? Also, to know whether or not that's indicative, you need to know how much money is out there that would be lost or made. What we can see now is that, we're just under 139 on the SPYs. If you look at my chart here, you're going to see that that number is close to about $500 million. We are way out on one part of the limb. Does that mean that we're going to go back up to the total amount at 142? It doesn't, and I'm going to explain why when we come back. Anyway, there's a lot to be garnered by the way that these options are set up. And we'll be back and explain it in just a few minutes.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
We're going to work a little bit more on options expiration this week, but we've got a call, and that's from Arian in Seattle. How are you doing today?
David, how are you?
Fantastic.
I'm staying dry out here. Staying dry. It's not raining quite yet. Hey, I got a quick question in regards to charts. I'm a beginner trader, and actually I listen to Daryl Martin as well, and I'm really having a pretty nice time with the Nadex platform. However, I'm looking to trade the indices and commodities. In the chart I use, it's a free chart system. However, it doesn't work well with indices. There's delays on the charts, that type of thing. So I'm looking for a quality chart that would work with the indices and commodities.
Well, it depends on what you're doing. We actually sell one here at TFNN, but it's probably not going to be what you're looking for. It's mostly around equities. But I guess the question is, what time frame do you think you want to be trading in?
Well, I usually do. I'm day trading.
So what are you trading?
15-minute charts, 30-minute charts, hour charts. Because I'm using the Nadex platform, so nothing long-term.
Well, you know, I'd probably talk to Basil. He's probably the guy that's buried in these, and Steve Rhodes. Those guys trade at a lot smaller time frame than I do. I don't even bother looking at anything less than a daily chart.
Right. Okay.
And are they right or am I right? It's different. I believe that there's more to be made than the little fluctuations during the day. The one nice thing about day trading, which I did for a number of years, is that you can go out there and make a little money every day. So it depends on a lot about your psyche and the way that you perceive the market and your mentality. But to me, I would probably try to look at something between what Steve Rhodes and those guys do. They're probably the ones that spend more time on short time frames than anybody here at TFNN.
Okay.
But you said you were calling about the S&P. What do you? Was that the same thing? You just want to trade the S&P intraday? Yeah,
pretty much the S&P, the Russell, that, and the commodities. Try to stay away from the currencies. They tend to not really move.
Well, they can move a lot, and you can make a lot of money. They tend to move and have very long-term trends, and exactly. That's where people love those, because if they have the patience, they can get in and move. I trade futures occasionally, probably 4, maybe 8 times. I might have 8 trades a year in the S&P futures or the NASDAQ minis, S&P minis, that kind of stuff. But I wait and only trade when the odds severely give me an edge out there, and that's not very often. You'll get 3 or 4 times a year that you can make huge money in the stock market, and I think that's one of them now. We've been doing well for about 6 weeks on puts and just being short various equities out there. But that's got to be it. What have you read like Tom's book, some of the other books out there on technical trading?
Not yet. I just, like I said, I'm new at the trading, but I do watch the shows, and you guys do a fantastic job. So okay. Just taking it slow, it's an educational process.
So have you read Reminiscence of a Stock Operator?
Oh, no.
Okay.
No.
And have you read Trading in the Zone?
Not yet. I've heard about it.
When I've mentored people, I told them that they shouldn't trade again until they read those 2 books.
Okay.
And another one that I would highly recommend is Fooled by Randomness. Mm-hmm. Because those have very little to do with actually trading, but getting your head right. And I think 90% is just having your head right in trading. And to me, whatever you do or whatever charts you use or whatever, those 3 books are the first thing before I even talk to people about getting into that point. One's history, one's being correct mentally, and one is trying to get you to think in a way that I think traders should think. So all 3 of those are good books, and I recommend them highly. I don't like to talk to people before they've read them because, for the most part, they don't really understand a lot, especially history. And that's what Reminiscence of a Stock Operator shows you, that there's really not that much difference in the stock market from 100 years ago to today. But I'd give those guys a call. Probably Basil is spending more time on short time frames than anybody else now.
Okay. Well, thank you, David. I appreciate your time.
You bet. Anyway, we're going to get back to our options expiration curve here. Wanted to get into this week because a lot of people, I've written several articles in Stocks and Commodities magazines over the years about using options expiration. Again, if you there's 2 things. One is that over time, 85% of options go unexercised, which means they expire worthless. They are set up to do that, and hopefully a lot of times you can go back and figure out exactly where a stock is going to expire on Friday, and you can, even on short time frames, look at it, but also get an idea whether or not it's worth carrying that position to expiration, even if it isn't a put or a call. If you just have a short positions like I have now on some stocks, what is the chance of this thing really moving in the next 4 or 5 days? Is it worth the risk of actually holding that stock if news comes out? And you could only, let's say you've got a stock and it's $50, It's $51.25, and you think it's going to expire. The options say it's going to expire at $50. You've already made $5. Do you want the headline risk out there to go and wait for one more dollar in the price of that stock? You may or you may not. But what I wanted to show is two charts here today. The first one is the SPYs. And what you find out is that if all things were perfect, the SPYs would expire right about 141.80. When you start getting fairly extensively far away from those numbers, they tend to act very much like magnets. If you put two magnets close together, one will grab the other one, snap them both together. If they're far enough away, they don't even affect each other. And that's kind of the way that these things work. If they are close, they will start pulling the stock in, and it's worth the money for the broker-dealers to push the market around enough to actually get these things to close and expire worthlessly at probably the best price for them. Now, there are some charts that have a good example of showing them. I'm going to show you one here. It gives a good example. Hog out here is a good example. Let me see here if I can. There we go. When you look at this, it's got almost a perfect example of how much money is going to be won or lost. Unfortunately, there aren't a lot of puts or calls right now on Hog. So probably not truly indicative, but a pretty good indication that this thing wants to expire somewhere around $45. If there was a lot more than $1 million at stake, we would probably see option market makers want to push this thing around. There's probably more money to be lost by pushing a stock like that around. When you look at the indexes, that's not true, especially stocks that have very high short interest and also tend to have lots of money spent on them, like Apple. Apple, we're probably going to find, I think it's still going to 522. But, you know, can it hold out this week until expiration's over around 550? It could. 545, probably going to hit 522, I would expect, the first couple of days of next week. It wants to go down and test that previous low. Maybe we'll look at the chart in a little bit. But what you find out is this is a beautiful example of where this stock really would like to expire out at about $600. If it did, there's almost $1.1 billion that's going to be made on Apple puts if it expires at that time. If they could push it back into $600, about 400,000. So, you know, there is a lot of reason to continue to push these stocks back to that point. Again, when you get this far away from expiration, these don't show very much prediction. Again, they have to be fairly close. There has to be a lot of money at stake. This one gives you that kind of money, but doesn't give you the kind of ability for someone to push a lot of money. Remember, this is a stock with $600 billion of market cap. $1 billion sounds like a lot, and it is. Now, if they could get that by pushing the stock $10, that would happen. In fact, I think last month, or was it the month before, it was at $700, and they expired it exactly at $700 that day, and they were able to collect about $300-400 million more than if it would have expired at $690 or if it would have expired at $710. So a lot of times you'll look and you'll see a lot of puts or calls on one specific strike, and the market makers, have a financial foot in this, and they like to keep their money. And, you know, a lot of these places that are market makers have deep pockets, like Merrill Lynch and, Goldman, those kind of companies. They can throw a lot of money at a company for a couple of days if they don't think it's going anywhere. It's not going to go south in a heartbeat. And then they'll sell the stock Monday, Tuesday of next week, and that will be it. Now, the bias is going to be up on Apple, but I suspect that we could see probably a low in a lot of these stocks tomorrow before about 2 o'clock in the afternoon. That's generally the pattern. There are prevailing winds out on the ocean. There are prevailing winds in the stock market, and a lot of it is to see the high of the week or the low of the week on the Wednesday early afternoon before that Friday expiration. If you would like to maybe have me read what the options say about a particular stock, you certainly could call in to 877-927-6648. That's 877-927-6648. When we look at some of the other stocks, big stocks out there, they all tell me pretty much one thing for the most part, and that is that we have some stocks out here that are could be pushed a lot closer. Probably the one that has the best bias for an expensive stock out here is Priceline. If they could push this up a little bit, again, $20 million against the market cap of Priceline, probably not a lot. You saw, a huge amount of money on Apple. Probably going to see a huge amount of money on some other stocks as we look at them. Facebook would be one out here. Hopefully, see if I actually do the right thing here and take a look at Facebook. There we go. Facebook, we've got Thursday coming out with the lockup period over. But you can see that what they probably want to do is get through pretty much Friday on these options. But the option curve actually shows that they'd love this thing to expire at about $22. And they got it up there and pushed it up there for a while. But there's only about, $100 million. It really starts kicking up over the next, if it could go to $16 by Friday. We have a caller, and it is Dave from Boston. How you doing today, Dave?
Hey, Dave. How's it going?
Dave's not here, man.
Yeah, I remember that. You're showing your age, Dave. I remember that very well.
They're gonna be down here. I thought I had tickets to it a couple of Friday nights ago. My girlfriend said, "Hey, I got tickets," but it's. She said, I thought they were that night. It's like the 12th, maybe. Oh, they were already here.
Yeah,
man. They're already gone.
What a great show.
We missed them.
You missed them?
I missed them. She had tickets. We must have forgot about it. She didn't say anything to me. Anyway, we're talking about Bank of America.
Bank of America. Yeah. What do the options tell you where Bank of America may close on Friday?
Well, let's take a quick look here. If I can actually type it in correctly, BAC.
Yeah. Now, this stock has held up fairly well, even in the downturn. I'm kind of surprised it's showing some strength. It really didn't drop all that much. I picked it up as a swing this morning. I was debating whether to hold it until Friday.
Okay. Just give me a second here.
Sure.
Actually, we're going to go to a break here. When we come back, we're going to go through the options on Bank of America. It's trading out close to the mid-9s here right now. It's got a lot of pressure to go down to about 9. We'll work on this a little bit more when we come back.
Thanks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for.
Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I had people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I said, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And we're talking with Dave from Boston, and hopefully he's not up in smoke. But
No.
But we have $9.42 on Bank of America for the last quote I have here. Low was $9.28. I would like to see a lot more money on Bank of America to see these more predictive. But it's a pretty good indication that this thing wants to close somewhere around $9. But $12 million on a big market cap, not that much money for them to lose, option market makers, so that they're not going to push this around so much. But you've got a fairly decent indication that $9 is probably where this thing wants to expire on Friday.
Huh. So that's still a decent drop from here.
Yeah, it's not that big a deal. I mean, it's not the end of the world. A lot of this theory comes from what's known the wisdom of crowds. And I just happened to see it again this weekend on the Science Channel. Someone was talking, and I saw the guy with a big gallon jar of jelly beans. He went around and asked how many jelly beans were in the gallon jar. Of course, he knew and had counted them. but he asked 160 people. And what do you think out of 160 people, what was the average, and how many how far away was the average of what everybody predicted out of 160 people? Normally they use about 30. I've seen most tests around 30, 35 people. But there were 5,210 jelly beans in this jar. How close do you think they were on the average of 160 people they asked?
Oh boy, there's 55. They're probably within 30%.
No, that 160 people, you should be plus or minus 5%. But if I think there were 5,214. So, I mean, you've got some people guessing that are way off on either side.
Right.
Like, 20,000, and then other people guessing 500, right? They have no idea. But it's called The Wisdom of Crowds. There's a book out there by that same number. And a lot of this stuff, like looking at options expiration, is that. Generally, individually, people are very wrong, and they're way wrong. But when you average how wrong they are, you get a fairly good indication of where the true answer lies. And that's kind of the way that these options work. Most people are going to be wrong about 85% of the time. They're going to end up being worthless. But it gives you, it's one more tool out there. And again, you have to be fairly close, like this one. It's not that far away. But you normally have a bias. I think you have a market bias. We have light volume markets starting to pull back again. We're probably going to have one more day of some kind of doji-looking character out here. It's hard for me to say that we've had a low in this market until we have a decent tick down, and we have some fear. And what scares me more than anything is that they could move the VIX down yet another, third of a point down here today. I want to see some fear. I want some people coughing up, puking up their shares where I can buy them at a very low price.
Yeah, there's no panic yet. And that's scary because that means we can go a lot lower.
It certainly does, and all I see is an endless parade on the cable financial television station about buying more today, buying Apple today, buying everything. I wanted those guys to say, they've been wanting to buy it all the way down. I want them to say, hey, I can't buy it anymore, and maybe then it's time to step in. I want to thank you for the call, Dave. We're going to be looking at options a lot more this week because I'm expecting this kind of stuff where the market really doesn't move that far. We're up about a little less than 3 points on the S&P. But you have a great and safe day out there. We will see you tomorrow. Same bat channel, same bat time. All Dave, all night.